Guys, it's Riley here, just doing an update video on my stocks accounts, both the Sharesies and Hatch accounts. So over the past few weeks since my last update, I have bought a few different shares. You can see some of them here. I've bought more Dropbox, more Beyond Meat, more Square, and more Shopify. And two new ones that I've added are these top two, ARKG and Tattooed Chef. I've only put a little bit into ARKG so far, the Genomic Evolution. Just put in $400 so far, as there was a dip and I thought it'd be a good opportunity to chuck some money into that sector, as I don't currently have any in there. So yeah, just a little bit down on that at the moment. And Tattooed Chef, it was going crazy when I was buying it, and it's since come down to probably a decent buy price again. But I already put 3,900 New Zealand dollars into it, so that's now the position that I've put the most money into in the stock market. Close to 10% of my whole portfolio. So I want to probably not put too much more in there unless it goes below $21, in which case I will probably add some more. In terms of what I still want to buy, Walgreens Boots Alliance, I want to get some more into there. Currently only have put in almost $900. I'd like to get a few more hundred into there, although as you can probably see I don't currently have funds in my account to do that, so I need to transfer some over once I get some money, once I get paid. You may have also noticed that my balances are down a bit here. It says down $800 for just the last working day, or the last day the stock market was open, trading day of 2020. And it was not just the one day that I was down. I'm actually down about $2,300 from the highest point, even though the last 3 or 4 days were positive days in the market because of money cycling out of growth stocks and into more value stocks. My accounts are actually down quite a lot. I was up 13,500, which is about 45%. And as you can see, I'm now only up 11,200, which is 34% across my two portfolios. That percentage does get dragged down every time I put money in as well, which I have put in a few more thousand since my last update video. So yeah, I'm going to be buying more Walgreens Boots Alliance and potentially more Dropbox and more Tattooed Chef. As I already said, I'll only buy Tattooed Chef probably below $21 if it falls back down that low. If it doesn't, I probably won't buy any more, seeing as I've got such a large position already. And Dropbox is the other one that I may add to. I've already got a fairly large position, 3,700 or 3,800 already in there. So don't want to add too much more, but it does have very good upside potential and very little risk to it, in my opinion. So I would like to add some more if it goes lower, back down to probably a similar buy price as Tattooed Chef, actually, probably $21 or under would be a good buy price. Also, since the last video that I made, I have added two other things to my portfolios. I put just a $500 investment into Squirrel, like a peer-to-peer lending program. Makes 5% per year, which I realize isn't that much compared to the gains that I'm kind of going after in the stock market and through property, but it's kind of a safe platform to get some returns on your money, and I thought I'd give it a try so that I can just like gain information about whether it's trustworthy and reliable and stuff, and it's a pretty good safety net if you've got a bit more money than you want to contribute to the stock market, because it's a bit risky. You can put some of the money into something like Squirrel as kind of a hedge, a backup to keep your money safe. Guaranteed interest as well. So my Hatch account's sitting at $9,800 which is 13,700 New Zealand dollars, which has come down over $1,000, unfortunately, but still up almost 70%. And you can see my tattooed chef position there. So to build that position, I actually did have to sell a few other stocks because I just didn't have the money to put into the account at that time when I first had that buying opportunity. So I've sold off a few of the smaller positions, such as Microsoft and Simon Property Group, and there was a couple of other small positions in here that I sold off, and just one more main position. You probably noticed that Tesla is no longer in my profile or portfolio. Looking at the long-term benefits of owning Tesla, it's been great so far, and it'll probably continue to go up, but a lot of price targets only have it growing maybe 14% or so over the next year, or some of them only similar amounts over the next 2 years or 3 years, or some of them have big numbers, like $1,000 price target for the next 5 years, but when you amortize that over those years, those 5 years, it's not actually that huge of a return. So I have moved out of Tesla as well to put more money into Tattooed Chef, which I think will grow faster and is a better investment. But I could be wrong, and Tesla's a hugely innovative company, so to be honest, I do kind of regret selling out of it, but I was looking through all these positions and I couldn't find anything that I'd rather sell out of more than Tesla that had enough money in it to actually get a good sized position into Tattooed Chef, because that was my goal, was to get the money into Tattooed Chef. So yep, had to do it, had to sell it, and it's done. You can see this has come down from a bit over 7,500 to 6,300, so quite a decent move downward there. You can see it in the graph there. Decent move down. Oh yeah, got up to 8,000 there at the highest. Now down to 6,300 profits. But that's fine. Eventually, it'll bounce back out. It's a buying opportunity at the moment. I just wish I had more cash at the moment to put into these stocks that are a good buying price, like Beyond Meat. Very good buying price. As you see, I'm down 6.62% currently. And Genomic Evolution, ARK Fund, decent dip, down from 105 to 93. I thought that was a pretty good opportunity to put a bit of money into there. Dropbox, even though I'm still up, I think it's still a good buy price, because of the potential that it has over the long term. And yeah, I'm just starting to buy into MicroStrategy. As you can see, there's only a $20 buy limit or buy order in there, but I would like to put some more money into that as well. I haven't done the full research yet though, so that's why I've only got $20 going into there, just to put the stock into my portfolio so I can see it and track whether it's going up or down, just to keep an eye on it, and while I do the research and figure out if I want to buy into it, which is MicroStrategy is also linked heavily now to Bitcoin, so kind of have to look into Bitcoin as well to see if I really want to buy a lot of MicroStrategy. And yeah, Shopify as well. Put a little bit more into them since last time, and I would like to put in a bit more. I usually put in a bit more than 1,600 into companies that I think have good growth potential. I'm planning on selling out of maybe a couple of my New Zealand stocks, such as Sky City. I don't really know how much upside it has left in it, like in the short term to medium term. Maybe long term they'd recover a bit more, but probably at a rate slower than I would want to make money. I mean, you can see right there, current price $3.20. They usually trade around $3.80, and that's pretty consistent for a long period of time. So not a huge amount of upside potential. So probably going to sell out of them now that I've made the recovery gains. And Kathmandu as well, because they had a share dilution. It looks like they have a lot of upside potential left, but because of the share dilution, if you consider the market cap before and the market cap now, like if you looked at a graph of the market cap, it would be pretty much back in line to where it is, or where it was before the March crash. So I'll probably sell out of Kathmandu as well in order to put more money into the companies that are kind of taking a dip at the moment in the US stocks. I also sold $500 roughly of Hallensteins, just because of the dip in the US stocks. I wanted to get more money over into that dip. And also you'll see they've grown well past their where they were before the March dip, and I mean their 5-year growth isn't like crazy impressive. They've around about doubled in 5 years, so I chase stocks that move faster than that. So I'm thinking it's a better opportunity to get out of this one slowly. Could still have some upside potential, so I don't want to pull it all out straight away, but yeah, I've pulled out about a quarter of the position so far. For sure in Pikel Healthcare, I'm not sure what I'm going to do with that, to be honest. May pull a bit out of it. In New Zealand, I'm just going to leave for probably the long term. But yeah, that's my portfolio update. Oh, and crypto. I put like a little bit of money into crypto. That's in US dollars there, at the top, the 611 US dollars. Not a lot. I don't really follow it as much as I follow stocks. So yeah, thanks for watching the update. This is where my account's at the moment. Leave a like, subscribe if you want to see more videos, and have a good day. See ya.